Ladies and gentlemen of the crypto space, we're live on a Monday, September 15th at 11:47 a.m. And I would like to congratulate everyone that has spent all of this time in these markets to get to where we are today. And note that this is a follow-up stream to our emergency stream that we had late last week. And that is exactly what's going on. You see this tone in these crypto markets, and you see this capacity to have a lack of consistency. Everyone's so indecisive. There's this lack of conviction. I mean, all we've ever had on this channel, this stream for years at this point, is this endless, excessive conviction in how to execute and what to do, how to behave, what to think about, methodology, rules of the road, as George Carlin used to say so well. That it's very contradictory to what you see on social media. So the market went down today because Nvidia is doing whatever the hell it's doing. We don't look at the wrong data. Look at the right data. The right data doesn't tell you what to buy. The right data tells you the overall situation for the market. What is the world doing? Can you smell the breeze in the air? When a sailor goes out to sail, he's not thinking about turning the wheels. He's smelling the breeze, checking the directionality of the wind. It's a second instinct. It's a gut instinct because he's not looking at the data that everyone else looks at. He's looking at data based on his experience to understand the shit that he's going to have to deal with. And that's exactly why we look at the dollar. That's why we look at the move indicator. That's why we look at 10-year yields. We're looking at the right data. We're sticking our lick finger in the air to get a sense of what the hell is going on, what direction is the breeze. That's exactly what the move indicator tells us. The move indicator basically it's leads and lags. Which one leads? Is it yields? Is it currency? Is it or is it it's one of the two because move is obviously volatility of treasuries and forward-looking indicators on you know interest rates. Um, so it's a combination because which one leads and lags is the point of the thought. As debt volatility drops, as treasury volatility drops, it introduces a capacity for the system to extend credit. So if the system is borrowing where people are more inclined to borrow, that means they're less likely to purchase dollars from the forex markets. That means they're maybe more inclined to purchase collateral and give it to a bank to borrow dollars against it, which is the printing of dollars rather than the buying of dollars. So someone has X amount of euros or what have you, and they're like, I need dollars. And obviously, it introduces the question of you're not going to be able to buy US treasuries in euros. But that's where cross currency swaps come in, and there's a whole mess in the forex markets. It gets messy, but suffice it to say, the high level observation that I had a long time ago was that when there's a capacity for the system to extend credit, it takes bid pressure off the currency in the forex markets. So when the move rolls over, the DXY rolls over, and the DXY is really confirmation that move is taking effect, and people are starting to believe and behave that the collateral price is going to stabilize. And as the collateral price stabilizes and hopefully ticks up a little bit, you want your collateral price going up rather than going down, at least cyclically. We're obviously done with the secular trend. It was a 41-year secular trend, so did pretty good. But at least cyclically, with an increasing collateral price, you're able to get better credit terms. You have more collateral, better loan to value ratios and whatnot. So, and that presents an increasingly favorable condition for the printing of dollars rather than the purchasing of dollars, ladies and gentlemen. So while everyone's stuck on, oh, why is crypto taking a dip down to 114 because Nvidia got peed on by the Chinese markets? Why folks looking at that? The irony is maybe the biggest irony is that me, who doesn't look at price action of Bitcoin too much. I look at the structure of it, and the structure looks good. So once again, we have a further disconnect from prevailing social media because this looks great. You literally had a retest down to the previous all-time high that was set back in January of 2005, maybe a little bit earlier in December of 24. We had a breakout and a retest. And 2 weeks of a retest. This looks glorious. We don't have an invalidation of this. What we have is a retest. What do you get if you print the higher high? If you print the higher high, you got the trifecta of bullish confluence. The breakout, the retest, the higher high. I've been saying this one for years. Come on, guys. You guys know about this one. Psh, psh, psh. And there's your higher high. And that's called the trifecta of bullish confluence. According to the captain, that's my proprietary terminology. All rights reserved, copyright. Just saying. Um, And you got the same thing across the board. All the technicals look extraordinary. I mean, it's pretty much where Ethereum is as well. Um, you're still above that the 44. Well, we're at 44.83, so we're above the 43.80 by a fair amount. This is basically all-time high territory. And as we said, from a total three perspective, we were really close. It was right above it last night, heading into Sunday night. And we failed. And obviously, there's you see the wick right there, and that's where we are. You're right on the ceiling. You're at the same capitalization across these crypto markets that you were back in December of 2024 and November of 2021. This is called the ceiling. Now, obviously, from like an ascending triangle perspective, which is what a lot of the macro folks, including Raul and other prominent folks, look at, you can have some sort of retest of a trend line. I don't really like trend lines too much, but you got a fair amount of compression and however you want to draw it. I mean, maybe a couple of touch points there. That's a decent trend line. So, and you've had one, two, three hits, and then the measure. You want to do a measured move. If this is the trend line, so you got a fair amount of touch points there. The measured move is measured move. Boop. It says a breakout at the very tip. Shit, we gotta flip it. So let's flip it real quick. I don't do tech. I'm no professional. I just play a technicals guy at home on TV. Oh dear Lord. No way. Is that yeah, yeah, 809. Yeah. Oh, that'd be so gross. 11 trillion. No way. Is that possible? I mean, technically. I don't want to talk numbers like that. That's disgusting. Was that opium or disgusting whatever it is, it's absolutely gross. You get a 10x, and we're saying, do you know what? Okay, so price action, TVL. It's all about concentration of capital, and capital is really a measurement of purchasing capacity, and purchasing capacity is done with dollar liabilities, which is basically stable coins in crypto terms. Trying to distill all these complex ideas in my mind to a simple statement: stable coins. More stable coins, you could buy more shit. So if I take my USDC and I buy Ethereum, that Ethereum is still in the crypto markets. It's now in an LP position. So someone's going to buy it. Someone's going to buy my Ethereum, my USDC that I sold to buy Ethereum. You get it? Someone has to buy the USDC, and they do that using Ethereum. Why? So, that some folks find that one strange. But the point is, the stablecoins circulate. It's like this fluid dynamics from an engineering standpoint, and these stablecoins flow around and they slosh around and they aggregate and they accumulate and they flow to one side of the market and then they flow to another side of the market and they cause all sorts of weird concentrations, and when you have that concentration, you get significant price appreciation. That, like, if you get an extra $2 billion that flows onto Solana, the odds are you can have absolutely insane price action. Okay, and this is really a very favorable way of talking about consumer price inflation. So if you have $1 trillion that flows to from the United States to Great Britain, you can have insane price appreciation because all of a sudden there's an extra $1 trillion in circulation. So what happens if $1 billion flows from mainnet into, let's say $10 billion flows from mainnet into base or Solana? You get a base over double total circulating supply of currency on base. You're going to almost significantly influence, three quarters, the circulating supply of currency on Solana. Well, what if you do that onto Linnea or Optimism, and you're talking about a 20x? So obviously you need a catalyst for that kind of cross-border capital flow, so to speak. But the point is, if $5 billion flows onto Optimism, you're not getting a 20x appreciation in the assets. It will multiply the asset pricing significantly more. When the currency flows, it causes a tremendous amount of price distortion, and you get this exponential repricing of things. Because as I said, when you buy something, the currency unit is still within the ecosystem, causing all sorts of psychological distortions, pulling in more capital, and just all this churn and all this exuberance. It just gets really weird, folks. And that's pretty much where we are. At least with this chart is potentially indicating, along with all the rhetoric from the administration, all the overtones from all the regulatory authorities, it's just a significant increase in currency supply, which can lead to what this chart says, which is basically just a measured move on non-Bitcoin, non-Ethereum total market cap, which is about 10x, let's say. And a 10x isn't even like wild. 10x in crypto? 10x? So I don't let my mind run down that rabbit hole. What if this thing does disgusting like a 50x? What the fuck? What does that even mean? I mean, 10x would be disgusting unto itself, but I like to remind myself and ground myself that a 10x, which would be a technical measured move, would cause the most disgusting price distortions I think any of us have ever seen. Be much more disgusting than anything we saw in 2020 and 2021. $10 trillion? Oh, gargantuan grossness. So, okay. So as folks on social media are like, oh, it's all over. Oh, the Fed's going to cut rates and it's going to collapse markets because that's what it's done in the past. Um, I'm like, don't even really look to the Fed. Just follow the three rules. Three rules govern behavior. Three rules tell us what to do, why to do it, when to do it, how to do it. That was that was why I came up with the three rules, and that has given me all this comfort. Like, as I look through this data, I understand where we are in the market, why the market's doing what it's doing, how the market's doing what it's doing, how currency works, how money is created and printed by the US and outside the US. I understand that. How do I take all this shit that I see and apply it to, what do I buy? When do I buy it? What do I do with it when I buy it? And how do I make that as simple as possible such that at 5 o'clock I could go sit down and be like, all right, what do you guys want to eat for dinner? You don't have to babysit anything. You don't have to think too much about anything. And this is really the title of the stream. What did I title this stream? Because I said the getting on the train part. And that's a big one, ladies and gentlemen. Timing will really mess with folks' heads. And the other hardest part of capital management is understanding getting on the train is the hardest part of the journey. Total net worth, such a waste of time to think about. Getting on the train is the hardest part because once you're on the train, that's it, you're done. Once you realize that all you have to do is buy more assets, you're done. After you figure out what to buy. And you purchased it. Pay it in full. Don't borrow money. Don't lease it. Don't finance your asset purchases. Pay it in full. Buy what you can. Some folks call that DCA. Own more assets over time. And that's how we win. Hope that helps, ladies and gentlemen. That's my 2 cents. A little bit of a decent length opening monologue today. Let's go through the commentary. We'll check back on some technicals. Look at little old Arat. That's a nice retest, actually, of a decent level. The captain's own meme coin, whatever it means, I don't know. Doesn't do anything. I'm going to take the Arat that I have. I'm going to throw it on curve as an incentive, and it's on base, and it's here, and I got to put more. And I could put more. I don't want to use it all because then people are just going to sell it and it causes excessive depreciation. But at least it gives some sort of TAPR. I don't know why the TAPR is down there. It should be more. Maybe I'll throw some dollars on there, USDC. I don't know. But the point is, I'm just having fun playing around with a couple of things. And if folks want to listen, the way meme coins work is if folks buy it, other people buy it because then it gets on the top list and it causes exuberance and everyone's like, "Oh, Arad is the outperforming token of the day," and then Korea picks up on it and they buy it, and then China picks up and they buy it. Everyone buy it, and then that this is the same shit for all the meme coins. That's all a meme coin is: exuberance and virality. So I don't know, not much for me to do anyway, but I keep it up to take a peek at it. And here, we'll take a look real quick at. Yeah, it's nothing to look at. Gamma, it's me to look at that, but whatever. I'm not looking at it up 110%. Anyway, it's a red day, as you all can see, so what the heck am I looking at? Oh, there's one thing that's green. Oh, look at Aerodrome coming in with an 8.6% on the daily. Buck 29 coming out swinging. Woo! It's a hell of a price point. I don't know what's going on. I mean, just it follows its own narrative. Everything's red on the day, and airdrome's now at 9%. It follows its own narrative. It's on its own warpath. It's just it's on its trajectory. Someone winded it up and let it go, and cheapers, creepers. All right, cool. I am very happy. We talked about this probably about 4 or 5 months ago, right about now. And by the way, when I say we talked about it 4 to 5 months ago, that's called getting on the train. Once you're on the train and you have purchased something, you're done. You've chosen to spend your money. Like when you go in, clearly not the same. You go into a supermarket and you paid the bill. You spent the money. It's gone. It's done. You bought something, and clearly you're going to eat it. And digital assets not the same thing as a consumable. But if you go into Best Buy and you buy some shit, a phone, a vacuum, a big screen TV, you spent the money. It's gone. The money go bye-bye. You bought something. More people need to think about assets as assets. And what's the difference between assets? There's only one simple difference between assets. Some are appreciating and some are depreciating. Some assets are really liabilities. They're not even assets. You buy a car and a car loan is not an asset. It's mostly a liability. Okay? So treat the assets like an asset and you'll do much better thinking of them as a purchase. Because the vast majority of folks go absolutely insane thinking about net worth, go absolutely insane gambling. And all they needed to do was spend 5, 10 years in their 20s and you accumulate assets and you'll be just fine. You'll be just fine in your 30s. That's all you needed to do. All you needed to do the entire time was buy more assets. Now, the only difference between folks is the earlier you realize that, the more fortunate you will be. I didn't start doing that until maybe my late 30s. I mean, I worked in corporate, so most of my portfolio, like in 2019, I pillaged my IRAs. And that was from working in my late 20s to pretty much all my 30s, maybe well, 5 years ago, 2019, I was 30. 36. So I work between 28 to 36, and all these corporates give you the 401k bullshit. And then you do every time you leave a corporate, you roll it over into a rollover IRA. And then back in 2019, I just said, all right, give me the penalties, give me the penalties. And just I took all the money out of the rollover IRA. And that was my story about 5, 6 years ago. So I was in my 30s. The only difference between folks is if you're lucky enough to wake up in your 20s. If you're lucky enough to wake up in your 20s. Or if you had a business idea and you had some more capital, maybe you wrote some apps. This is what I did and back when Android came out. Oh, I've told folks. I wrote one of the first 100 Android apps ever back in 2009, give or take. I don't know. It's called Shady SMS, if anyone looks it up. Old school. And then there was Vegas SMS, and there was a whole bunch of apps based on that concept. Decent concept. Then there was material messaging when material design first came out, and I don't know, that was fun. Anywho, so those were moderately not successful. Successful, they're very successful for being just a small developer. Anyway, the point is, working is enough, and then obviously, if you're able to do something above and beyond, great. There's more capital to buy more assets. That's the biggest thing. It's just you can't spend. It's how you spend money. Folks have to think about how they spend money more. You can't just spend it all. And you can't just buy assets. You also have to have cash. You also have to have dollars. You have to have carve out capital into the cash position, as we've talked about. Anyway, I'm digressing. I want to get to some commentary. If anyone has any more thoughts about when to start or how to think about capital management, considering how old you are, yada, 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 more than happy to always help and talk about those topics. Fugu in the house. Hi, all. Joel Reynolds, good morning, Cap. The Hook, good morning from the back of the class. Welcome. Mateo, good morning, Cap. Much pleasure. Yam, good morning. Contrarian thought, at least in our little circle, investing in staked ETH as a revenue generating business. Yes, works great. It's not really contrarian. It works great. You just need size because it's what's the, I mean, you need size because if you get in 3%, 3%, 4%, 5%, I don't know. What's the average rate of return on, let's go to, you go to FRX ETH. Go to FRX ETH and we can get that number because they're usually ahead of the curve. Probably still. Uh, rewards. All right, 3.45%. All right, so but that's less than the risk-free rate of return for U.S. government debt. But Ethereum's, if this is the principal, and the principal has the potential to do many multiples, that multiplies your APR significantly. So that works. With 3%, you're talking about $34,000 on $1 million. So, okay, $10 million, that's $340,000 a year. Okay, 340,000, that's a nice salary. Yeah, that's all relative. I say things like that. So $5 million and you're making $160,000, $170,000. That's cool. Maybe less than that, $2.5 million, and you're making $80,000, let's say $75,000. All right, that's about an average salary. So it's about 50% higher than what the median salary in the United States, 50 and change $1,000. I'm pretty sure it's still around $50,000. So, but you're talking about needing millions of dollars worth of principal in Ethereum. So that's the only complexity with thinking of Ethereum as a business, as an investment instead of a cash position, is you need some meaningful size. And then you could define your structure, your portfolio structure like that. That's okay. I define Ethereum as cash because that's how it fits into my overall portfolio structure. It is absolutely okay for someone else to define it as their business investment. And I would encourage that. If you have $15 million and you're like, all right, I'm going to take 5 million or 10 million. I'm going to play it safe. I'm going to take 10 mil and plow it into Ethereum. That's cool. Making $350,000 a year off the 10 mil. What do I do with the 5 mil? Then you're playing around in DeFi. You own various things. Larger portfolio affords different capacity to diversify. Smaller portfolio, different considerations. So this is very dependent on total portfolio size and age and variety of other considerations. So nice observation. Well said, as always. To expand a bit more on the thought, if V curve pays you for living expenses, you're in a good place. If STF pays you for living expenses, you're probably in a better place. That is absolutely the case, as I just described, with regard to the amount of capital required to have a reasonable cash flow. You need a fair amount of capital. This is all about rate of return. Your rate of return is 10%. You have different considerations and a rate of return of 3.45%. Meaning you have x st eth every time x becomes x plus y, you harvest the y. Sure, this all works. That all works just as you think. Just you crunch the numbers. If you want 100 grand, it's a fair amount of capital. That's the only consideration. Sir Joe, president accounted for. No horns, no tail. ETH is a currency and issuance is subject to change. It's a reasonable statement. It's probably is more mutable than Bitcoin. Bitcoin is quite immutable. But Bitcoin is mutable. There's soft upgrades and there's hard upgrades. So it is quite mutable. The community does accept upgrades. I don't think you can even compare issuance on Bitcoin versus Ethereum. The community is so diehard on Bitcoin, they're not changing issuance unless there's something systemic. But Ethereum is probably more likely to mutate currency issuance, as we've seen historically. So I don't really think of it too much as a consideration. I treat both of those units as cash. I treat Bitcoin as cash and Ethereum as cash. I don't accumulate Ethereum because I prefer the increased degree of immutability of Bitcoin as cash. And that cash happens to be collateralizable cash in these crypto markets because in the real world, cash is just cash. But in crypto, I define my cash as Bitcoin. Therefore, it nicely has this additional collateralizable attribute to it. That's pretty cool. Um, that's obviously a hot debate. That's a classic conversation, no horns, no tail. How different is it from VECRV as a business and its profits are subject to change? Well, here's the kicker. VE curve is increasingly immutable as compared to probably Ethereum's emissions potential. The potential, I mean, some things you cannot change. You would literally have to modify the state of the Ethereum ledger, which would require a 51% attack. And considering it's proof of stake, you would need to purchase a tremendous. Okay, so yeah, that's mostly a moot point to even consider in most regards. Um, Subject to profits are subject to change based on business considerations, but the mutation of the Ethereum ledger is a manifestation of consensus. It's quite different in that regard, at least. Curve is an asset whose asset structure is not likely to change. Yeah, mostly what I said. John Steps, good morning, Cap. Any thoughts on Arrow's LGE for Syndicate on Wednesday? Yeah, that LGE is awesome. I look forward to, I wish I could use it. I would vote on ARAT, Agent Rational. I don't know. I don't. I have no interest in Syndicate. That's probably going to increase a fair amount of revenue for not voting on Syndicate because people are voting on Syndicate to bootstrap Syndicate, and I'm like, I'm going to vote on USDC ETH and get my cash flow. So I'm like, that's a nice distraction. I'm cool with that. I don't want speculative revenue. I don't want whatever the token is for Syndicate. I don't want that. I want cold hard cash, be it Ethereum or USDC. And frankly, let's take a peek for the fun of it. Maybe the numbers have been skewed. Maybe I'll be surprised. Let's see. What are we at? 9%? That's crazy on a day like today. All right. Oh, am I at number one? Seven. Okay. Oh my God. So this is all distorted. 702,000. So we're not at highs. 20%. 20% on $702,000 in revenue. That's just crazy. My 2 cents is this is the future. Autopilot and our what is it? 40 acres. Oh, here's the future: is these relays. So 40 acres has a nice deposit, 100% USDC. Boom. Am I going to do it? I don't know. I don't know. Let's look at the autopilot and see what it says. Autopilot says 13. Okay. Okay. I like autopilot as well. 24.4%. The future is autopiloting. Whether you use one platform or another, you call it autopilot, you call it 40 acres, or you call it a relay. If you could automatically, optimally get the most cash possible from your voting, you've achieved the holy grail of business. It's like you realize what autopilot is in real estate terms. Autopilot in real estate terms is automatically having your tenants actually pay, and there's no collections. It's all automatic, and they just send you the money. Now, most real estate owners and landlords know that that's usually not always the case. It's complicated. There's a lot of friction. We're looking at deterministic software that automatically executes that. Oh, 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 excuse me for being a little excited about that. Frankly, I think that is absolutely insane. That is crazy. Automatic vote optimization, click the claim, USDC. That is crazy. So between the drones having integration, and I heard Velodrome is coming to autopilot at some point, that just has some finalization and validation and confirmation required. And with the X tokens on Shadow and EtherX, um, that is going to significantly reduce my weekly work requirement. I mean, I don't have too much at this point. Uh, Hidden Hand is a manifestation of my old school balancer position. Every month or so, I go in and update the lock, and I revote on balancer, and Hidden Hand automatically collects the fees and converts it to Ethereum. So that's actually really convenient because that gives me gas. Want the Ethereum? Get some gas, convert most of it to dollars at the top of the cycle. Cool, long the market. Um, What else is in here? Vote market. Automatic. VE curve is you don't have to vote every week. And now with vote market is claim once every 6 months. So vote market V2. Thank you. For the win. Here's your drones. I got a Thana position. Whatever. That's really not doing shit. But it gives you your Binance exposure. So maybe something will become of it. But here's your X tokens. Great. I gotta convert those to the X tokens, because I have little to no interest left in voting every week, or at least minimizing it such that I don't have to do it. Maybe someone else in my family can. Maybe I teach my younger children how to vote so the captain doesn't have to vote. He just delegates the responsibility. Um, what else are you talking about, John? 100% supply. I have no idea. I don't bootstrapping. I don't care to vote for that LP, I care about cash flow. Can I get 20 plus percent APR? It's not personal, it's just business. That's the way it always is. Gillis, good morning. Hello. No horns, no tail. Price and function are different. ETH recently changed its entire structure from. No, recently, that was years ago. Has adjusted issuance and burn after that. And the burn was years ago as well. So it's not as simple as people think. It's called consensus. Consensus is an absolute requirement. Everyone needs to agree. It's not easy to achieve consensus. It's not just, "Ooh, we're just going to upgrade willy nilly." Same consensus that is achieved on Ethereum is achieved on Bitcoin. Consensus is consensus. The concept of consensus. It's just a different community. So maybe the community of Ethereum has a different capacity or willingness to achieve consensus on more dramatic changes, and Bitcoin is significantly more hesitant to dramatic changes. But guess what? There's an update roadmap for Bitcoin as well. there needs to be consensus for those updates to actually take effect. So I don't I don't really care too much about the conversation anymore. I think about everything from a capital management standpoint. I don't care what the best cryptocurrency is. I care what the best business is. I care about how to manage the cash position. Hey, go figure. I choose Bitcoin partially because of the talking points you're mentioning. No horns, no tail. Um, Foreign money that government can't fuck with. That's a very hyperbolic narrative that the general public loves. They eat it up, they lop it up. They love that narrative, the whole Fed money printer narrative, and Bitcoin fixes everything. Okay, I'm cool. Well, cash. Can't keep all your cash in Bitcoin. You have some Bitcoin. Why do you have Bitcoin and not just dollars as cash? Yeah, Bitcoin because you could borrow against it. And Bitcoin into the future is going to go up in value. But you don't spend all your money. You never spend all your money. Money. Currency? Never spend all your dollars. I know there's a lot of overlapping terminologies and it gets complicated sometimes, but you don't spend all your dollars. You need dollars. You need some cushion. Dollars afford you a capacity to make a choice and to make a purchase. Can't really purchase anything with Bitcoin, even considering the fact that I talk about all these debit card nowadays, and you could pay, you could load your debit card with Bitcoin. You don't store all your money in Bitcoin. You got to have some liquid cash. A healthy cash position has an appropriate balance. Maybe it's 95% Bitcoin, 5% USDC. You never spend all your cash. Still got 5%. Whatever makes you sleep at night is the most important balance. I don't know how you would be able to sleep at night just all Bitcoin, because if you're all Bitcoin, you got volatility, you have to sell some Bitcoin, get some cash in order to go to the supermarket. You have to keep track of all that shit from a basis standpoint and an accounting standpoint for tax purposes. What a waste. What a waste of time. So always keep some cash on hand so you don't have to think about selling your Bitcoin. Just makes sense. At least that's hopefully what I'm trying to describe. A more sustainable capital management bucketing. Cash, Bitcoin, stablecoins. Everything else, investments. Investments produce cash. Cash, be it Bitcoin or stablecoins. Then think about what's the balance between the Bitcoin and the stablecoin? Something that's manageable, something that's reasonable. Listen, you get a windfall in something, you got an extra 100 grand of stablecoins. All right, take some and throw it into savings account, as the general public narrative goes. They call Bitcoin the savings account. So maybe it's a cash savings account. I don't describe it in those terms. That's cool, but maybe it kind of is. What's the balance in the cash account? Anyhow. And Stu, good morning. All right, ladies and gentlemen, on X or on YouTube, if you have any final questions, please feel welcome to throw it in the chat. Otherwise, we're going to wrap things up around here in the next couple minutes. Let's pull back up to charts. Aerodrome still sitting at a buck 30 on the. That's probably the most interesting thing to talk about on the daily, in my opinion. I mean, everything going on with base is still in effect, and everything, the potential for aerodrome and velodrome re-merging, and this launching system that's going on base with aerodrome. Just all the narrative is still there. We don't have to regurgitate it. Nothing's invalidated. It's not like, why is it going up or why is Bitcoin going down? These are silly questions. The question, or there should be no questions. What you should have more so is observations. The observation is, all right, Bitcoin's down, Aerodrome's up, and all right, there's some strength. The fact that Aerodrome's up on the backdrop that Bitcoin is down, that's cool. Happy we got on the train some months ago. Is this a good time to get on the train? But probably not. Um, Getting on the train is the hardest thing to do. What happens if it goes down? If it goes down to 80 cents, got on the train at a buck 30, that's not going to be pretty cool. If it goes down to 80 cents and you get on the train and it goes down to 50 cents, you're like, God damn it, I could have bought it 50 cents. But if you get on the train at a buck 30 and it goes to 213, you're like, I got on the train at a good time. So that's the thing about getting on the train. Getting on the train, by the way, means making a purchase. You only have that feeling of, did I buy at a good price after you get on the train? So none of this helps getting on the train. None of this helps you getting a good purchase. Logic just says you try and get the cheapest price possible in something that you think will be worth more in the future. And that is all speculation. When you were down here back at 28 cents, there's a big deviation below this decently drawn level at 50 cents. How do you know it's going to start going up and not just continue going down and down and down? That was the depths of despair a mere short couple of months ago in April. It was all over for Aerodrome, 30 cents, everything was bleeding out. Pretty painful price point. It took pretty much a fair bit of insanity for someone to make a big purchase, which is maybe conviction, but there's no technical justification or support for that kind of conviction. Well, if you got up here, okay, that's a different story. This happens to be where I bought. So I broke out, smacked into this level, which is a decent level, but it was kind of set. This level was set up here. So I set that level because of this wick right here. But then you nicely had the breakdown. And so this level here was set because of this interaction back here, back in 2024. So I saw this interaction with that level at 50 cents. I was like, all right, I'm cool. I'm going to buy it. And that was about 63 cents, give or take. And the flight school took it down to about 30 cents, average price point. So that was pretty nice. And then it broke out. Listen, it could have easily hit resistance at 80 cents, bounced back down and been like 50 cents. And I'm like, shit, I paid 60 cents. It's at 50 cents. Could have fallen down, could have printed a fresh lower low at 20 cents. And I'm like, all right, I did not get on the train at the opportune price point. That's a potential way this whole thing could have played out. Did it play out like that? No. Did I know it was going to play out like that? No. Did I think and hope it was going to play out a more favorable way? Sure. Was it guaranteed to do any of that? No. But it is what it is. That's why you needed the overarching rule. And the overarching rule is own more assets over time. So you buy this thing, hopefully at a good price. You get on the train at hopefully a good price. Then you get another thing, hopefully at a good price. Then you get another thing at hopefully a good price. And then after 5, 10 years, hopefully you got some shit at a good price. 6 out of 10? All you need is 6 out of 10, hopefully at a good price, and you probably be okay in 10 years. That's the whole point of the rules. To do just a little bit better than the majority. That whole 51% idea. Hope that helps, ladies and gentlemen. Dean made it live. Hey, Cap. Much a pleasure. Always a pleasure, my friend. Drone relays, ABC, CVX, Clean Boost, Rex 33 makes crypto boring. Executing rule number one. I think you just surmised a very healthy perspective on these markets. ABC, CVX, derivatives of convex, complicated. I don't, guys, you know my opinion of derivatives, but it's liquid, so therefore it's easy to liquidate. And at some point, anything not nailed down needs to be sold. Drone relays, cash flow. Will drones exist in 5 years and 10 years? Will they be a higher price? If they're a higher price and they continue to exist, will they print more cash flow? I speculate, yes. That is what gave me the conviction to make a purchase at what I thought was hopefully a good, fair price. Could have bought cheaper, but I didn't. How- That's my you see. Notice my facial expression when I answered that. I could have bought cheaper, but I didn't. I overpaid, but it went up. I underpaid relative to current price. I overpaid relative to where I could have bought it. 30 cents. I didn't buy the 30 cents. I bought it up here in the 60s. Am I upset about that? No. Not because it went up, but because this made sense from a technical standpoint. It was a good choice. Hang your hat on good choices. If you make good choices, you'll do well over years. The only difference between people is rationality, really, which is ultimately a capacity to make thought out, well executed choices, good choices. So try your best to make good choices. I agree. I like auto voting, and all I have to do is claimable stables. Yeah, I really look forward to that. I haven't applied my assets to those automation or those relays. Uh, these guys, autopilot and 40 acres, but because I need a greater degree of comfort. I need to sleep at night. Um, so once I do that, and I look forward to that, that's where I want to be. I want to be automated. Bring back we can do better. I, I'm more in the I hope that helps type of mindset nowadays, Dean. But those were the days. We can do better. It's just you listen. I've been doing this for years, and I appreciate 216 people on the stream. That's a lot of people. But 216 compared to what's out there is, you know, you guys. The fact that there's 216 listening to me right now are literally doing better than the majority because you're at least being exposed to these types of ideas, these types of thoughts on how to do better. So I literally don't need to encourage you guys to do better. You are already doing better because you're starting to think about things a little bit differently. You're already doing better, guys. That's a big deal. I only like voting when I want to long certain assets. It's a goddamn good statement. Or accumulate specific assets. Follow up to a good statement. Something so awesome about being able to pick when you get paid weekly. Well said. Gosh darn good message. Well said. I overpaid as well for a few assets. I think in hindsight, 4 or 6 years from now, the purchase price will make me look like a genius. Time will tell. I like to think I feel the same way. I know what you're talking about. I think we're going to be just fine. It's very hard to get that multi-year mindset. Where will the top be? Where will Pico top be? Where will Pico bottom be? Where will the crash take us? What will the crash be like? Will it be different this time? I don't know. But my answer to that is I sure as shit want to find out. I got my tickets paid in full. And that I think is what you're trying to say as well. I made my purchases, I paid in full. You think of them as tickets. And we got front row seats to watching this insanity play out. Eight water hilariously saw a post asking you for the next runner in the revenue meta. Oh, this whole crystal ball shit that social media is obsessed with is insane. This whole what is next is insane. Whole pontification. It's just I know it's popular. I know it's popular to ask someone else what they think. And look, you guys are here listening to me what I think. But I don't know the answer to what's next. I don't even necessarily know the answer to what's the best asset. I just know how to discuss the attributes of assets. I know how to discuss what an asset is, what money is, what capital is. And this is basically things that I've taught myself over the years. And it just so happens, based on this understanding of how this whole shit show works that we call economics and humanity, there's a couple of things in the crypto markets that express that. And those are the things that I chose. Plenty of assets that I don't own that have done really, really. I don't own hype. I have no hype airdrop that would have been worth millions. I don't do that. So plenty of things that I have not been successful at, and I don't have the answers to things. I am not the pontificator. I am the obsessively consistent rationalizer. I'm just obsessively rational in that to the point where I'm like, this is what I'm going to talk about. This is what I understand. This is what I know. I will only talk about the things that I know, such that I could always have a reasonable answer. And when there's something I don't know, I can't talk about it. Or at least I'll say that I don't know enough and I can't talk about it. Good stuff, dude. As you say, higher lows on the overall portfolio and year-over-year cash flow. Oh, you're on a roll today, dude. You're on a roll. That's it. That's my expectation. Higher lows, higher highs on cash flow. Generally speaking, I expect that as well from total net worth standpoint, except more importantly is the cash flow because that's what you could live off of. And that's all that matters. I mean, even if you have a year, a lower high year, as long as it's not a lower low, then you make good choices. And in the end, that's all it is did you make or did you not make good choices? So, a lot of folks, I remember my wife, I'm looking to see if she's looking at me, telling me years ago when she worked at an office manager, and folks would come in like wealthy clients. It was a doctor's office. And she was like, how did they do it? How did they know? How did they invest? What did they know that I didn't know? They didn't know shit unless it was some insider type trading strategy that they're doing what we're doing. They bought assets, and it just so happens in 5, 10 years' time, those assets became the bee's knees, the talk of the town, the cream of the crop, the shit that everyone wished they bought when 5 years ago. You bought it, and it turned into something big. That's how they did it. That's how all the wealthy do it because they followed rule number one. Whether they defined it as rule number one or not is another story. She does not. No, because you know why? She always every time because I'm doing the stream here and she's out of the office, and I'll be like, I'll say something that she would respond to, like just me mentioning her, and she'd be like, "The hell's he talking about in there? Is he talking about me again to the people?" And I just find it funny. Anywho. All right, ladies and gentlemen, 12:39 p.m. on a Monday, September 15th. I appreciate each and every one of you that stuck around to the end of the stream. 226 people, and you are all now that much more rational because of it. Beginning of the week, stay cool, calm, and collected. You got FOMC on Wednesday, I believe it is. So this is going to be a heck of a week. I look forward to the social media. Doesn't really drive me nuts at all. It's just crazy, and I understand that it's crazy, and it's just information, and information is a good thing. I will see you guys and gals later towards the end of the week. Until then, peace.